Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Tuesday, the 22nd of January, 2007. The markets closed, and we had a very volatile session here today. The markets gapped significantly lower this morning after overseas markets were experiencing heavy losses. And we finished, though, with a loss of just about 1% for the S&P 500. And you can see here with that big green candle that it was up substantially from its lows. But I'm not quite convinced that we have a bottom here. Obviously, the market's gotten very sold off. And again, bottoms are a process, not an event. Last week, we were looking at the weekly time frame at these levels of potential support at the trend line and the prior resistance. And once again, I'm going to repeat that you only know what support is after the fact. You can look for areas where the market might find buying or a lack of selling, and it looked like maybe that would be a likely area for some support. But obviously, the market didn't find support there. And as I said last week, that when we see the market approaching that levels, what it does is it gives us reason to look at the shorter term time frames to look for evidence that the buyers may be gaining control. And as I was pointing out, there has been no signs of buyers anywhere on any of these time frames. And again, today, even though we were substantially off these lows, we're still, below below Friday's support that seemed to be forming near that 132 level or so, and we've got a declining 5-day moving average. So it's really hard to say that the worst is behind for this market. What I'd really like to see would be a test of these lows here in the next, sometime this week would be really nice to see. Then we might see a MACD divergence set up that would be tradable. If you recall, the last time we had the MACD diverge, it was over here, but it didn't make it past that level of resistance. So, and that was that inverted head and shoulders pattern as well. It didn't make it past that level. There was no reason to enter, and the market went back to the path of least resistance from the higher time frame, which here again is the daily time frame. So when we look at the intraday action, what you're going to notice is the importance of the VWAP today. This market really, gapped lower. Buyers took control early on, and this intraday daily VWAP was tested on and on again throughout the day. And you'll see that it wasn't just in the S&P 500. But when you look at this 1 minute time frame for today, what you see here is the market did close lower by about 1%. And but the buyers were in control basically of today's session. Now this is going to be an important level going forward. Is basically that 130 level here in the next few days, and we're still in a very volatile period. Just because we had a big rally from the lows doesn't mean the worst is behind us by any measure. We're still in a very solid downtrend here. Bounces do occur within that downtrend, and again, hopefully we can see a retest of these lows and maybe shake them out just a little bit further before we get that any such bounce. But with a declining 5-day moving average, the intermediate term trend remains guilty till proven innocent. We're also just starting the beginning of the very active release of earnings. Apple today after the close. I haven't looked at that yet, but they'll due out, I guess, any moment now. And keep in mind, even if there's one good response from earnings, like we saw in IBM last week. IBM had earnings, and the market turned around for a day or so. On the 14th, I think it was when those earnings came out, so maybe it wasn't last week, or it was last week. But on the 14th, the market looked like it was starting to rally. It never made it past resistance levels, and then the next shoe dropped. So don't look at Apple or any other one individual stock as having the power to turn this market. That's a mistake that a lot of people look at. They say, a stock, maybe Apple's up 10 points, I don't know, and they'll rush in to buy everything else in the market. Don't make that mistake. The market is in a downtrend, and even Apple is in a downtrend here on this daily time frame. Looks like it's maybe trying to find support near that 200-day moving average, but obviously this stock has seen better days, and maybe it can stabilize in here, but it's not showing those signs on this stock either. So continue to be very careful. I'm still looking at this market as a day trader's environment. I went home 100% in cash again today after doing some day trades, and you've got to be very selective and make sure that you're quick to exit your losers, as I said on my blog this morning. Looking at these semiconductors, still trying to stabilize, near this 350 area. Obviously, it's closing below the 350 level, but it seems to be trying to stabilize there. The most important level of near-term resistance is this 365 level. If this market somehow stabilize and get back above 365, then perhaps we're going to see a little bit of strength here in the semiconductors. But right now, still, we've got lower highs in here, and we've got, again, a lower low today. So we're still in a confirmed downtrend. We've got a declining 5-day moving average. No signs of buying here. Again, I'm going to repeat that this market is guilty till proven innocent. The IWM, Russell 2000, actually finished up 8 cents today. So this is the second day that we've seen the IWM, Russell 2000, kind of stabilize a little bit better than the rest of the market. Still no signs of a real bottom in here, though. We've still got a declining 10, 20, 50, 100, 200-day moving average. The market remains in a solid downtrend. There will be bounces, of course, as there are in every bear market along the way. The most important level of near-term resistance should be found near about that $69 level. And then above that, we had that 73, which was very important as well. So we do still have the declining 5-day moving average. No reason to be involved here. What we were looking at last week was this descending triangle on this 30-minute time frame. And you'll see that, again, the height of that pattern did measure down towards the $65 level. We had that target exceeded here on the open this morning. That's where we saw the bounce. And again, looking at the daily VWAP, this market held above that rising daily VWAP all day long, right up till the close where it tested it once again. So still, the 1-minute time frame, maybe the buyers took control for one session, but still just a very choppy, volatile market with a downside bias, obviously, on every time frame that you look at. So this level here, again, 69 is the key level of potential resistance for this market. Getting above that, maybe we've seen the worst of this, but still way too early to make any kind of calls for bottoms. The NASDAQ 100, this market was down 2.5% with its $1.17 loss. And you can see by the big green candle that it did reverse intraday as well, but not quite convincing that that we've seen the worst here. This $44.39 level from the August lows was taken out, and the market did close below that as well. So when we look at the weekly time frame, you can see that we're below here. That's this market is just deeply oversold, in need of a bounce, but again, the path of least resistance remains lower. We've got this declining 5-day moving average. We've got these prior intraday levels of support near 45 acting as resistance. We've got 45 as an important level of potential resistance, then at about 46.5. So this market remains very much intact with the downtrend. And again, the 1-minute time frame here on the Qs today, there were numerous test of that daily VWAP, but it did hold, so that's one encouraging sign, but only for today's session. And again, be very careful. We've got all these earnings reports due out and a lot of other outside catalysts that may influence this market, so you have to just remain very careful overall.